By 2008, SAC managed $14 billion in equity and recovering from the housing recession and growing faster than before. In that year, SAC portfolio manager Matthew Martoma started building large positions on two pharmaceutical companies, Elan and Wyeth, who were developing promising drug trials for Alzheimer's.
There were several analysts and traders who felt very bearish on Elan and Wyeth, and they could not understand why Martoma and Cohen were building up these pretty substantial unhedged positions. And Cohen would say, well, Martoma knows a lot about this.
It turned out Martoma's information came from a special source, Dr. Sidney Gilman, who was affiliated with the company. The two drug companies were scheduled to announce the final results of the trial on July 28, 2008 in Chicago. But through Dr. Sidney Gilman, Martoma knew the trial was a disappointment. SEC started to aggressively unwind its large positions in Elan and Wyeth, and in fact, ended up going short those two stocks to make bet against them. The share price fell through a cliff. In the meantime, Cohen made $276 million betting against the two companies. While enjoying this incredible profit, Steve Cohen did not realize that this is the beginning of his downfall. Martoma was convicted in 2014 as what federal prosecutor claimed as the most profitable insider trading conspiracy in history. At the same time, the SEC brought charges against a number of other SAC employees. Before long, Cohen himself was charged by the SEC for his failure to supervise his employees. Cohen settled his civil case with the regulators in January 2016 and was banned from managing outside money until 2018. Fortunately to Cohen, with the help of his team of prestigious lawyers, Cohen himself was able to avoid any criminal indictment. This is a devastating blow, but Cohen refuses to give up. He now must look for a new edge, one that allows him to continue to make great profits. By 2014, SAC closed its door and converted to Point72, a family office.
And so the ability to have your own family office controlling your investments, controlling your cash flow without every other big firm knowing about it is very important. And I think that's a lot of the reason you're seeing more and more of them start up.
Essentially, Cohen gets to run his hedge funds made out of his own money. He also realizes that he could stake other hedge funds run by his former employees. Majority of the return is from the investment at Melvin Capital that made 47% in 2020. Without the black edge enabled by insider trading, Point72 has not been able to make large returns like what SAC used to. Its only hope is allocating his money to other hedge funds who may possess the black edge. Known for his audacious bets and crazy returns, Gabe Plotkin was a superstar portfolio manager at SEC.
With Mr. Plotkin, it seems like really strong stock picking. He's had experience managing money for a long period of time. He was at SAC and then Point72 since 2006.
Gabe Plotkin has been consistently outperforming the market over the past years, reminiscent of OG Steve Cohen. But neither Cohen nor Plotkin could anticipate a group of amateur traders from Reddit will bring them down to their knees. Hedge funds are raking billions for their wealthy investors. At the forefront of this growth was Steve Cohen, who single-handedly turned a small-time fund into a $50 billion empire, almost doubling every year. It turned out his secret was insider trading. After being dismantled by the authorities, Steve Cohen is forced to think of new ways to make money. Point72, the new firm Cohen founded, started to make high returns after allocating to other hedge funds, started by his students. Point72 was regaining its past glory, but Cohen's newfound success will soon be challenged by the most unlikely group of people. On January 22, 2021, approximately 140% GameStop public shares have been sold short. With such a large amount of shares being shorted, they could trigger a short squeeze.
That the stock market will be brought down by the wild actions in stocks like GameStop. That's that retailer place game. You go in and you buy video games, you buy the hardware. This GameStop is really something we must talk about because it's been bid up higher and higher by enthusiastic traders.
By the end of January 2021, Melvin Capital had a loss of 53% of its investments. Now struggling for life, Cohen partnered up with the Citadel, putting $2.75 billion to bail out Melvin Capital. Both hedge funds lost a lot of money during this incident. It was like the high tower surprise to all hedge funds. It is safe to say that Point72 has lost its edge. Recent years, Cohen has expanded his investment into venture capital, quant strategies, and so on. This is all in search for new alpha. But with the regulators constantly watching them and the negative public sentiment against hedge funds, Cohen has essentially retired from the active role.
Follow your passion. It's not all about money, right? The money comes from, success comes from being passionate about something and then doing it to the best of your ability, whatever it is.